Good morning, everybody. Hope everyone's doing so well today on this Wednesday morning. We've got big data out. Markets are moving. We're going to cover it all. So CPI data just released 30 minutes ago, and we're going to get right into that data without a delay here. So let's get right into it here. We have the CPI data month over month right here on top. 0.2% versus 0.2% coming in line with estimates. CPI year over year coming in slightly better. We just cracked the 3% threshold on that CPI number. The expectation was for 3%. And so, again, we did come in better. And remember, for those of you that may not know, the CPI stands for Consumer Price Index, and it is a gauge of inflation on the consumer side. So this is the one that means the most to you and I overall. We want to see this number coming down substantially and really getting back to 2%. Personally, I'd rather it lower than 2%, but we know the Fed mandate or the Fed goal is 2% on the inflation side. Now, if we look at the spiders pre-market, you can see that we initially had a kind of a whipsaw here. Initially, the markets popped, then dropped, and then have slowly floated back up in the pre-market session. Why did that happen? Well, basically the essence of it is this, is that yesterday the PPI data came in much better than expected on both numbers. Today's PPI just came in better on one number. So there was a little bit of angst initially saying, wow, it's not quite as good, meaning expectations were for both of these numbers to come in better, not just the year over year. I think markets really would have preferred this number here at 0.2% to come in at 0.1. That didn't happen. But when all is said and done, there's a positive vibe in the markets. These numbers are still very, very good, and it still paves the way for a rate cut in September. So again, I think that's really, really important to take note of, that the markets at this stage are still factoring in a rate cut in September. Let's flip over here, guys, and scroll down to check out what we have going on here. So if we scroll down on the verified investing website, by the way, just as we're going down, don't forget that today after the bell, Cisco Systems reports. That'll be a big report tomorrow morning. Alibaba, Walmart, JD.com, and Deere, and then Applied Materials on Thursday after the close. And I'm just stopping along the way because I wanted to point that out. But if we scroll down to the very bottom, we got our heat maps. And this is really what I wanted to look at here today, the Fed Watch tool. So if we bring up the Fed Watch tool, this has just come in with an update. And what we can clearly see is that we are expecting a rate cut in September, right? A nice chunk of rate cut there. And then a actual 2 rate cuts in November, which is actually pretty astounding here. So again, markets are pricing in 2 rate cuts in November. Originally, there was a question of whether we'd get 2 rate cuts in September. That doesn't look like it's favoring it right now, although we still have economic data to go before that number comes out. Okay, so right now, again, rate cut in September, 2 in November, 1 in December, 1 in January, 1 in March, 1 in April. All these are meetings. So every meeting is basically a rate cut. And then finally, when we get to June, 1 more rate cut. And then as of now, obviously, this is so far in the future that we have no clue what really is going to happen. But the markets are saying that rates will finally pause basically a year from now, right? In July of 2025. All right, always good to pay attention to this because it gives us a basis for what we know the markets are expecting. And then what we want to do is follow it and say, okay, well, has anything changed here? Has the market said more rate cuts or less rate cuts? And that, again, is very instrumental in basically what our outlook can be for the markets. And it tells us why the markets are reacting like they do. Okay, so let's go into things here. Markets, again, are just generally floating up. If we look at where we closed yesterday, we closed right here on the spiders. So again, it's not a very big rally this morning. In all fairness, this yellow line, a lot of you probably are saying, well, what the heck is that yellow line right there? Why is that line there? Well, check this out, guys. Let's get rid of this data here so it doesn't screw up when we flip to the daily. The yellow line is the gap fill on the S&P 500. How cool is that, guys? So you already see the markets right up into it, but struggling to get above, at least at this point in time. And so something very interesting to kind of monitor here. Even if we do get through this, amazing resistance just a little bit above. So we closed yesterday around 542. The level here, the gap fill is at 543. And then the max upside is 546. So from yesterday, max upside is $4 move into this level. I don't even know if it gets there, but this is a triangle of death. I'm gonna coin it that name. Now it doesn't mean death literally, right? It basically just means that this is like a massive level of resistance in the markets. Now, just to be clear, what have I done with this? Well, this morning I actually was covering a few long positions. We covered our Micron in smart money stocks. We covered our Qualcomm for a nice big gain as well. We were long those stocks, basically going back to last Monday, so taking profits on those. And then I've also started to inch into some shorts in the pre-market here on a swing trade basis. Now, I want to be clear. I don't just go all in on a short and just say, hey, this is going to be the level and it'll never do anything differently. What I do is I inch in, I dip the toe in the water, and then if it goes up a little bit more, I put another toe in the water. And this way it mitigates, trying to be exact on my levels. Levels can be exact, but the markets are fluid, right? They're ruled by greed and fear, which means they overshoot both to the upside and the downside. And we have to be respectful of that and understand that a level we may think is amazing may not be the exact high or the exact low. NASDAQ 100 here on the QQQ, trading up a little bit on these numbers, so you can see a little bit of a move up. Take a look at this, guys. Here we have the NASDAQ 100. Look at the size of this rally here on the NASDAQ 100. I just wanted to do my fibs here. Fibonacci is always a good tool to at least get a basis for. And if we do the fib tool, look at where the 50% retrace is right here at 464. And so we're essentially trading into that fib retrace. Doesn't mean we can't go through. I have actually a bigger level at the 618. You can see this pivot top here, this little pivot top, and this pivot low. But just to give you a basis of where you could see a little bit of resistance in the NASDAQ 100. Speaking of NASDAQ 100, take a look at Nvidia here. I adjusted my line a little bit. I was doing more research last night, and it looks like Nvidia is going to have a lot of resistance around 119 today. And if we flip over to it, take a look. We're already trading. In fact, look at the pop here on that CPI data. It actually touched that level pre-market, and now we are pushing back up towards it. So at 119, start to look for resistance, maybe a reversal. And ultimately, if it pushes through there, there's a gap fill up at 126.40. But my guess is you should have some sort of pullback based on how big of a move this is to the upside on the chart of Nvidia. And just to kind of show you guys from the lows, based on where we're trading pre-market, 31% gain on Nvidia. Now, again, I point that out because this isn't a $100 billion company. This isn't a $50 billion company. When it was down here, it was basically 2.5 trillion, and it's a $2.5 trillion company going up 31%. It should have some sort of check back just naturally, right? So we should be looking for that type of play. This actually might be a day tradable trade for me today in the Apex Live day trading room to try to capture that alpha there off of 119. Maybe I'll look at to start a position at 119, add at 120 if it pierces that level. I did want to touch on the dollar, the US dollar initially popping on the CPI data. Now, usually the dollar pops because numbers are not as good as expected, and meaning they're hotter inflation numbers. The reason why we initially saw this pop, just going back to understanding from what I said at the very beginning, was that essentially the numbers came in very good, but they weren't as good as yesterday. And so that's why you saw this initial pop on the dollar. But then look, as people are digesting it, they're saying, you know what? Yeah, I mean, it wasn't as good as the PPI. Both numbers didn't beat month over month, year over year, but they were still really good numbers on inflation. So, okay, the Fed can cut, therefore the dollar drops. Boom, right there. And again, I'm just walking you through the ideas, the mentality of the investing world to understand why moves are occurring in the market. All right. Now, on the 10-year yield, we had a nice pop on the 10-year yield, which matches the pop on the dollar. We can see the 10-year yield hasn't pulled back as much, but it is still coming in just a little bit. Now, one other thing I just want to point out. So the CPI data was the big data of the week. That was what we just had this morning, right? But let's not forget that last Thursday, and that's tomorrow for us, last Thursday, that jobless claims numbers actually moved the markets. So tomorrow, even though jobless claims are not a significant number in general, if for some reason that number comes in very hot, meaning high, a lot of people filing for unemployment, it could spook the markets a little bit based on the fact that it actually played a role in last Thursday's rally. That was the big rally last week, folks, where we had that monstrous move in the markets. So it could have an impact tomorrow. So just watch that, plus obviously the earnings that we're just talking about in the pre-market session. All right, so that's where we are in the markets here. And again, if you scroll through a bunch of different plays, most things are higher on the day. I did want to touch on Starbucks here, guys. Starbucks, if we flip back to my charts, here's your Starbucks analysis. I did want to show this. So yesterday, this was an incredible move. And again, I find it hard to believe that it's justified. I think there was a lot of short covering in this rally yesterday. Because again, I mean, listen, the CEO from Chipotle, awesome. Yeah, he did an awesome job with Chipotle. But is it really worth 25% on the stock? I would disagree. I mean, yeah, 10%, 12% maybe. 25 is a stretch. In addition, with the big move yesterday, look at these three trend lines that are converging right up here in this 97 to 98 zone, right? So we're really right now trading in the 95s. But if we get a push up today, there's a huge swing trade shortable level right around this 97, 98 level on Starbucks. So just watch that. Look at the three trend lines, pivot highs here, these lows right through here, and then this upsloping level right there. So I do think that, again, this becomes a very attractive swing trade. And by the way, it's not to say it can't pierce 100. The 100 is lurking, but I still think that, again, starting a short position, at least for me, on a swing trade basis in this range makes a lot of sense. Okay. All right, so that's that little chart that I wanted to go over briefly here, guys. Otherwise, in the pre-market, there's not a lot of earnings out there this morning. Really, the earnings get started tomorrow when we start getting names like Walmart out in the pre-market, Deere. I'm very curious myself about Alibaba. I have a position long in Alibaba right now. I don't have any JD, so that's not a big deal. But the Chinese stocks continue to look very, very attractive. In fact, I did want to show this FXI chart. FXI, not FXY. Take a look at this chart. It's one of my favorite chart setups where you have this long-term breakout and then price comes back to the scene of the crime and you start to have this next phase of the move up. This is all consolidation, retracing, and then you can see it's already bounced a little bit off of these. But I guess we'll know tomorrow when Alibaba reports. Tencent did report this morning, but again, for the markets here, I think Alibaba, Baidu, JD, that'll shape what we see in those charts. Okay. All right, guys, just a quick little tidbit here. Don't forget that on the homepage of the website, if you go into the AI algorithm tab on the homepage, my indicator on trading on LuxAlgo, which is available through TradingView, that again is available. So don't forget, it is a great indicator. It pops up automatically. Once you have it, it just literally will tell you high pivot, low pivot, and obviously even tells you when the indicator fails, when the profit taking is taking place. It's a very, very cool high-tech indicator there based on some of the methodology that I have here. So it's only like $30 a month. It's actually a pretty good steal of a deal. On that note, folks, let's take a quick 30-second break to just say hi to LuxAlgo and thank them for being a sponsor.
Have you considered enhancing your trading experience? We have an amazing tool for you. LuxAlgo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. LuxAlgo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with LuxAlgo. Please visit the description below and sign up for LuxAlgo today.
All right, guys, let's jump right into the chart of Bitcoin. Look at how Bitcoin's struggling at this key level here. So we knew this level was a pivot point right here. We got above it here, never confirmed, then got back below. That maintains the negative bias. Here we are kind of right underneath or on this level. If the equity markets can stay continuing up, eventually you got to think the risk on factor can push Bitcoin to the upside here. But right now it isn't. It is holding steady. In fact, you'd really want to see, considering the rally in the stock market over the last few trading days, you'd really want to see Bitcoin making a move to the upside. So I would say this needs to start sooner than later. Otherwise, I would be fearful that at some point we're going to see a sell-off in the equity markets, which could then push Bitcoin to the downside. So again, in other words, there's a stop clock or a stopwatch on this. Tick, tick, tick. It's got to make a move here today or tomorrow, I would say. If not, watch out below. It could be headed back down. Right now, that's where the angling is favoring. But again, I'm kind of rooting for it to close above this high and confirm so that we can get a move up. I still hold some altcoins, although we've taken a lot of profits over the last week or so on our altcoins in smart money crypto, but still holding some, looking for a little additional move. Speaking of one of the ones that I'm still holding here, we can see very clearly on the chart here we have this area of support, which is now actually resistance right up in this range. So we can see again that this again now should actually be saying resistance since we broke below it. In fact, I'll punch that in. Resistance right here. What I want to do is just take away here. That's really around the 2,800 level, this level right here. So that's your resistance line. If we can get through that, we should make a run at 3,000. But 3,000 is going to be huge resistance. Look at these two trend lines converging right here. So again, even if you get through 2,800, Ethereum's going to struggle likely at 3,000 on the charts. Next up, gold today, not doing a whole lot. I was hoping that gold would get a final push up here to that 2,500, I should say, on gold. It's not happening on the back of the CPI data. We'll see where it is later today, but I would still remain bullish considering how close it is until we hit that 2,500 level. If we look at silver chopping, this is intraday chop, as you can see. And really, if you can see this, I mean, silver almost no movement on the CPI data, right? This is where the CPI data came out, little pop, little drop, and it's essentially unchanged. And if we go to the charts, we're right on this level. Can silver get above and push up and maybe break out here to the upside? Remember, folks, a close above is good. It puts it in a neutral bias, but it has to confirm above to go bullish. And again, I stress that. That's what I teach in the Winning Trader series, and it literally has saved me from getting fooled on so many times where it looks like a breakout and then it fails, or it looks like a breakdown and then it reverses back to the upside. All right, looking at oil today, oil down basically flat on the day. You can see yesterday was a nice pullback day. There's nothing here on the charts. Sometimes charts don't give you a good signal. To me, I don't have a good signal. Great bounce. It's kind of in between the resistance up here, the support down here. Is it making a bull flag? We don't know yet. It's too preliminary. So sometimes you just have to say, hey, there's no strong bias one way or the other, and that's okay. Most charts, honestly, are not going to be good at good levels when you bring them up. It's maybe 1 or 2 out of every 100 that you look at where you'll say, Eureka, this is a great trading opportunity. In terms of oil, no idea here. Is it going to push up? Is it going to push down? But what I do have is a game plan. And the game plan is if it pushes up here, I short it. If it pulls back here, I'll determine if I want to go long at that level. Ultimately, my bias over the longer term remains to the negative side. All right, let's look at natural gas real quick as well. See what we got on this one. And again, got to bring up the natural gas chart. There we go. Natural gas making another attempt to the upside here today. 2 days in a row, it's pierced this line and failed. Is 3 days the charm? Is the third time the charm here? We'll find out later today when I do trading the close. I'll cover this. But ultimately, again, this is still a lot of resistance. There was a reason why I sold on the pierce of this a few days ago on the UNG position with Smart Money Commodities members. And now we're just kind of waiting to see, is this a bull flag? Does it pull back? Is there another opportunity here, or does it break through, go up to the midpoint? And again, just to be clear, where would your heavy resistance be if it does break out? Your midpoint right up here of the M pattern. So you have your M, and then this would be the A if it gets up to that level. And remember, this is another chart where there's no good indicator. It could pull back, it could drop like this, or it could break up here. If you don't have a good indicator one way or the other, meaning high probability, you just stay out of it. You just sit back and say, okay, I'll just wait and see. When something good forms on the charts, I will take advantage of that. But until then, handcuff me because I don't want to be doing anything stupid. We all do it. We all kind of jump the gun sometimes, even when there's not a chart. I just tend to do it less probably because I've been burned so much in my early career that I forced myself to be more disciplined. But again, that's something that every trader and investor goes through. You go through that undisciplined period. You finally, hopefully, learn that the money being taken from you is not worth being the undisciplined. And finally, you institute the rules the chart analysis, the education that lets you actually make high probability decisions in the markets. All right, guys. On that note, I'm going to get going. As always, thank you so much for being members or being at least watchers here at Verified Investing. Go check out the education, all of the free content on that homepage. It is worth its weight in gold. Trust me on that. I use it every day to understand what the internals of the market are telling me. You guys have a great one. Thanks again from verifiedinvesting.com.